How's it going, Variable Traders? Robert H here. Quick recap on XLNX today. XLNX, not really sure what the company does, but it sold off pretty heavily. Gave back probably almost half of the gains on the year here, as you can see from the daily chart. Basically from 140 down to 125, and then it's still selling off into the close here. So before I get into this, Variable Traders Challenge starts next Monday, the actual competition. Head over to the website, variabletraders.com. Read up on the details, how you can sign up, what the prize is, Andrew's travel setup. So XLNX, this thing lost the pre-market lows at 124 and change here. Someone in the room asked if you use the pre-market levels to influence your trades. I kind of do for orbs. I look at pre-market high and pre-market low. If it breaks out of that, that's usually a good sign that we're going to continue through. So Brian, in the room here, Brian, one of the moderators, he actually took this break of 125 actually, a huge collapse, basically lost $7 from his entry within probably 2 minutes, 3 minutes, right? We can still see 1 minute chart, 124 entry, within 3 to 4 minutes, it was already a $7 move. So then I missed that. I usually take the 2 minute orbs, and this thing was kind of a little scary. I didn't really know where to put my stop. I guess I could have put it here in retrospect. I could have put it, oops, wrong tool there, for this one. Put it here, short here, and target maybe here, or even 2 to 1 would have hit somewhere in this range. Anyways, missed that move, not a big deal. I knew that something this week would probably pull up after such a big move, pull up and give me a second opportunity, so no FOMOing, right? It pulled up and tested 121.75. I don't even know where I got that level. Well, I guess this area here on the daily. It pulled up, rejected the VWAP, and kind of touched the MAs on the 1 minute chart here. This is where I took it short on the new 2 minute low, right? Pull up, wait for the new 2 minute low, break, and put the range order, survive through some kind of sideways wave consolidation. Got my first exit there. And then I noticed on the higher time frames, the 15, right, and the 5, that it was doing a flag type maneuver, right? Red candle, big red candle, small white candle, opening candle is going to be red again. So I was like, okay, well, let's just reload and see what happens here, right? The risk to reward still favorable if we're going to get down to this 116 area on the daily chart. So I took it basically within a minute, went back in, shorted it again here, put my stop here right above these candles, and got the 2 to 1 there, and I was all out. So just 2 trades on that. Now quickly in the room, there was a few questions actually John Q, before I switch gears. John Q took a similar trade. He took the orb, 1 move there, and then he took the second flush somewhere in this area here. So John Q was also able to trade it twice. Now a couple people in the room, IG and Zen, they had some questions for me regarding breakdown or breakout versus pullback trading, and I took the time to draw this really ugly chart here, but this is how I view things. If you've been watching my recaps, you know I say this all the time, right? The market moves in waves. The market moves in waves, and related to that are moving averages, right? They always move and come back to kiss the moving averages, come back to kiss the moving averages, right? And the moving averages are a function of the price. That's how these things are calculated, right? What's the rolling cumulative average based on the prior candles, how many periods, 9 periods, 20 periods, whether you're using simple moving average or exponential. Go read up on Investopedia how those things are calculated. But you can trade without moving averages, right? Because if things are trading cleanly, right, the price action's clean, you're going to see these types of moves. And every time it comes back, that's usually a touch of the moving average, right? That's a kiss of the moving average, where people are loading up to short in this case, or people are loading up to go long. And as you guys know, I don't take the support or resistance entries. I take the breakout entries, right? And the difference, it's minor, I think, right? In my opinion, I like to wait for the confirmation. It makes my stop a little bit further, right? The risk is a little bit greater, but I feel the accuracy in return, the accuracy is a little bit better. So here's an example. Something sells off, nice good leg down, right? Comes back, short covering rally. I wish I had volume down here, but you would see big volume here, right, on the sell-off, and then you would see little micro volume, people covering and beginners taking the wrong trade, going counter trend, all that other stuff I talk about, right? And then it touches the MA, right? Sometimes it'll break over the MA, the 9, the 20, usually in this area, and people will start shorting here, right? People will start shorting this MA rejection, and they'll put their stop slightly above the MA. So their risk to reward is much greater, right? If say they're looking to get, I don't know, down to here, right? Their risk is tiny, it's like this, and they're looking to get this much reward. Now for me, what am I doing? I'm waiting for a break of the prior candle, right? I'm looking for a new 2 minute low or 5 minute low or 15 minute low, depending which time frame I'm looking at. In this case, as you can see, I actually took the new 2 minute low there, right? And then this one actually did a pullback. It was a pullback as a reload trade. After I covered, I saw that it's pulling back to the MA. That's a really good entry for a re-entry. So I kind of did both in that scenario. But anyways, right? So I would take it here. My stop is here now, right? Slightly above this candle. So my risk is slightly greater than the guy who took it on the pullback, right? And that's basically the difference. Is honestly, I don't think it makes a big deal. It depends what are you comfortable doing. So I feel that sometimes if I try to take the bounce off the MA, my stop is going to be so tight I'll get rattled out or shaken out of. Sometimes they'll pull back to the 20, right? They'll test the 20. This is one of the reasons why Andrew has kind of made his 9. He's made it a little lighter, almost transparent, so it doesn't influence his decision, because he knows stocks that are in play, they can move quite a bit, and as long as this general pattern continues its way down, it will test the 20. Sometimes it'll maybe even breach above the 20, but it won't close above the 20, right? That's usually his signal. Anyways, so that's really the difference, guys. IG and Z. I hope that answers your question. If you want to take it on the breaks, right, when it breaks the new 2-minute lows, or do you want to take it when on the pull up? Right, on the pull up, and then all you need to really do is flip this this way for a long, right? For a long. Are you going to enter here when it breaks up, or are you going to enter down here when it bounces off the MA, right? That's usually how these ABCDs form. So really up to you. Breakout versus pullback. Anyways, hope that answers you guys' question, and we'll see you guys in the chat room tomorrow. Don't forget, subscribe to our social media, Twitter, Facebook, all that good stuff, and check out the website for the challenge.